What's going on, everybody? It is your boy Stas here. Welcome back to another video. So the markets went down yet again today. Pretty much all the indexes here in the U.S. went down over 1%. We had more volatility in the markets today. The VIX went up, and we had the metals go down. Bitcoin, Ethereum went down. So pretty much all you got to know for today is that the markets went down, and we got to break that down in this video. We also have to break down some earnings reports, 5 in particular. So sit back, relax, and let's dive into the video. So right off the bat, like I mentioned, guys, today was a red day. All of the indexes went down over 1%. Actually, wait a second. The Dow, okay, fine. The Dow went down 0.96%. Maybe not over 1%, but pretty dang close to a 1% red day on the Dow. Other than that, we had the S&P go down 1.1%, Russell down 1.5%, NASDAQ down about 1.1%. And as of today's close, we ended up closing at 398 on SPY, right around a big level of support that I've talked about time and time again here, at least recently on the channel in the past couple of videos. That's, you know, a big spot on the downside, 395. If that were to break, I think we'd start filling the gap down to 380, and then the lows from the middle end of June, right around 360, 365. That is where we could be going. And in terms of triple Q, right, and we'll take a look at the intraday chart in a second on both SPY and triple Q, we noticed we closed right around 300. And I think this thing ran up a little bit heading into close. Yeah, just a little bit. It was at 298.44 in the middle of the day. We closed at roughly 301. So it did cover some ground, about 0.9, almost 1%. But still, it was a bad day. It was a red day overall for the NASDAQ. So we are seeing the moral of the story here is we are seeing a little bit of support right around these levels that I talked about. 295 on triple Q, 395 on SPY. So we might get a relief rally at this point before we then most likely start dumping again. But overall, we just have to see what happens in the morning. As of now, again, we ended up having a red day, but we ran up about 1% heading into the close on triple Q. And SPY, if I pull it up, let's see here. SPY ended up going up, probably not 1% to the close, but probably at least like a decent amount, right? Yeah, it hit 396 middle of the day, and then it ran up, closed at about 398. So that was about a 0.6, 0.7% move there. So pretty decent run up. I mean, not even a decent run up. It wasn't much at all, but we are seeing, the truth is we are seeing support at 395 on SPY, 295 on triple Q. So let's see how that ends up carrying over into tomorrow. So what do you guys think? Let me know your thoughts down below in the comments. And have you gotten your free stocks yet from Moomoo? If you haven't, there's 13 free stocks waiting for you, linked down below. Each of those could be valued up to $2,000. All you got to do is go to StasSurfS.com/Moomoo or use that link down below, deposit at least $100, and boom, you get your free money. Who doesn't like free money? And with that being said, let's talk about some earnings. We had Crowdstrike today, ChargePoint, we had Chewy, we had, what is the other one? HPQ, which is HP, and we also had Hewlett Packard. So let's talk, guys. Starting off with ticker symbol CRWD. And this ended up going up on the day barely, which I guess is good considering, again, today was a red day overall. This went up 0.6%. And it closed at 193, and when they reported earnings after the bell, it shot up to 199, dumped to about 187, and now it's looking like it's getting comfortable at about $192 a share after the bell. As I'm currently filming this video, about an hour and a half, it's 5:30, so an hour and a half after they reported. So they did 36 cents versus 27 cents estimated on revenue of $535.2 million versus $515.42 million estimated. So they double beat EPS and revenue. They both, they beat nicely on those metrics, and total customers also came in at about 19,000, or I guess exactly 19,686 versus the 19,605 estimate, and they see Q3 adjusted EPS of 30 to 32 cents versus the 28-cent estimate on revenue of 569 to 575 versus the 568 estimate. So I'd say that's a pretty good report, pretty good guidance. They didn't cut guidance. In fact, guidance beat the estimates. They double beat on the quarter. They beat on total customers. So not too bad of a report, I'd say, just at a quick glance there from CrowdStrike. And we're noticing here this chart looks pretty decent. One of the better looking charts, at least as of now, in the stock market, at least that I've seen. We have a double top here, sure, but on top of that, we also have an ascending triangle. We are riding above the 180 SMA, but we're actually under the 50, so we're kind of sandwiched between these moving averages. So I think if Crowdstrike starts breaking out of, I'd say 195 towards 200, 205, there could be a big move coming at that point. So for that reason, I have an alert at 220, which is probably a little too high. I don't know why it's at 220. I might have put that in wrong. I should lower that to 205. Boom. Right around 205 is where it is right now. And the next stock I want to talk about is ChargePoint, ticker symbol CHPT. They reported today as well, and it looks like the stock is up a little bit. It's up about a quarter here after the bell, and it closed at $14.49, shot up actually to about $15.50. So it shot up initially about, what is that, $1? And now it's pretty much lost all that, but it's still holding a little bit above the closing price. We can see ChargePoint ended up doing, well, I guess you can't see it, but I'm going to tell you what they ended up doing. They lost 28 cents on the quarter on, I'm not sure what the estimate was, but revenue came in at 1.08, or rather 108.29 million. I'm screwing up the numbers today, guys, versus 103.97 million. So they did beat revenue by about 5 million. That's good. But the losses have widened from last year. Again, they lost 28 cents on the quarter. Last year, they lost 13 cents on the quarter. So that's what we're noticing here with a lot of companies. Losses are widening year over year. And in terms of revenue guidance, I think, is this for the next quarter? Yeah, I think this is the next quarter. They're looking at $125 to $135 million versus $130 million estimated. Not too bad. So ChargePoint is moving a little bit after the bell here and pulling up the 4-hour chart. Let me see what it's looking like here. This chart doesn't look that bad. You know, it's right around the moving averages. If we start getting some momentum out of $16, $16.50, this triangle could play out, and boom, we could be right back to $19, $20, which is where we were in the middle of August. So I really like ChargePoint here. It looks decent, but we got to be patient. It's got to get above these moving averages, because as of now, this could also be a head and shoulders. You guys see that? Left shoulder head, right shoulder. So if this dumps under 14, 13, it's going to get ugly on the downside. So be patient with it. Set your alerts. Keep your eyes on it. And the next one is Chewy, ticker symbol CHWY, which you guys know if you're an avid watcher of this channel, which if you're not, I don't know what to tell you. You got to subscribe. Make sure to hit that like button as well while you're at it. You should know that we talked about Chewy months ago before it had this massive run-up. Remember I was talking about it in the low 20s, mid-20s, high 20s. Then it ran up all the way to dang near $60, $55, guys. Now it's back to 34. This thing has come down in a major way, and I'm not jumping the gun on it yet. Not going to just dive into it and buy it, even though it's down 35%. But it's at a point where I'm like, okay, I'm looking at this seriously now, especially if it comes down another $5, $6, $7. If it starts peaking into the 20s again, I might have to bite on that, to be honest. So Chewy is looking decent. Well, the charts are not looking decent. They look horrible. But in terms of valuation, it's starting to get to a price where I'd be willing to pick it up. But the quarter, I mean, there's a reason why it's down $3, about 10%, 7, 8, 9% after the bell. They reported $2.43 billion of revenue versus $2.48. So first of all, they missed on revenue. And in terms of EPS, they came in at 5 cents, which I'm not sure what the estimate was, but it doesn't matter. It's going down on a missed revenue number. And for growth companies, that's all it takes sometimes to send the stock dumping. I mean, if we start seeing growth slow down, what do you think is going to happen in stocks that have higher multiples? They're going to be like, oh, crap, it's not growing. Investors are going to be like, oh, it's not growing as much as we thought. We got to sell this stock off, and then it's going to come to a lower multiple to match what investors think the growth's going to be in the future, right? So in this case, that's what we're seeing here. We missed a little bit on the revenue. Growth is starting to come down a little bit, at least in the short term, and this could create a short-term buying opportunity if you guys get what I'm saying here. And this is for me. You, as always, have to do your own research. Please, guys, I'm not a financial advisor. Do your own research. So the next one here that we got to talk about is HPQ, also known as HP. What's it called again? HP Incorporation. That's right. This is free falling after the bell right now. It went down 1.4%, closed at $31 on the day, and now it's sitting at about $29.80. It's down 5% after the bell, and at its worst, it was down 9%. It hit $28.50. So HP Incorporation not doing well. And this is another one that I think I talked about it in my other video recently. A lot of value investors were looking at this one. I haven't looked at it personally, and to be honest, I don't want to put money into this. I could say that. Well, I guess it's not fair to say that without looking at the financials, but I'd rather buy something else personally. I'm just being honest. But it's at a low at this point. With today's dump after earnings, it hit a fresh low on this 4-hour chart, which is pretty interesting. That's pretty interesting, right? Not many. I mean, there are stocks, a lot of stocks at lows, but a lot of stocks are still off their lows from, the June bottom or the July bottom. Some stocks bottomed in June, some in July. Some haven't even bottomed yet, like this one, right? This could probably keep on going, or who knows, right? Nobody really knows. But they reported $1.04 EPS, which came in line, all right, but revenue missed by a long shot, $14.7 billion versus $15.70 billion estimated. So they missed by a long shot. And in terms of Q4 EPS, it's down big. 79 cents to 89 cents is what they're looking at versus the $1.06 estimate. So guidance is horrible. They missed on revenue. They came in line with EPS, but that doesn't matter at the end of the day. The stock is collapsing. So I'd be careful. This could start coming down towards, let's see where the lows were a couple years ago. Maybe it starts coming down to the mid-20s. Maybe we're talking $20, mid-20s on this. Could be a decent play. Who knows? We shall see, guys. And the next stock here on the list, make sure to smash that like button if you guys are still watching. I haven't done a challenge in a while. Let's try and do 100 likes for this video. Can we get 100 friggin' likes on this video? If we can, maybe we'll do something special. I don't know. Maybe not. Probably not. But hit that like button. And let's talk about the next one here. Hewlett Packard, guys, which is not the sexiest company out there by any stretch of the imagination, but they reported and the stock is moving up. We're actually, ripping after the bell. The stock is up 3-ish%, maybe a little bit more than that. So they did 48 cents of EPS, which came in line with the estimate. That's all right. Revenue came in at $7 billion versus $6.97. That beat. And they see Q4 EPS of 52 to 60 cents versus the 58-cent estimate. That's not bad. And they see full year 22 EPS of $1.96 to 204 versus the 203 estimate. So guidance is pretty much right in line. That's pretty solid. In line on EPS for the previous quarter. Not bad. And they beat revenue. So I would consider that a win. And I mean, the stock was already beaten down a ton, I think, heading into the earnings. Yeah, it was down from $15 all the way to $13.50. It already dropped 11% in the past 2 weeks. It was pricing in a pretty bad report, or maybe it wasn't. I don't know. But it surprised. I think the report surprised, hence why it is up about 30 cents here after the bell. And I'm not really necessarily looking to buy this one. Maybe if it starts breaking above 14.50-ish, that'd be a spot where I'd buy the breakout. But until then, I'm staying patient. I'm setting my alert, and I'm going to see what it does in the meantime. So those are 5 companies that reported earnings: Crowdstrike, ChargePoint, Chewy, HP, and Hewlett Packard. Now let's take a look at some other ones. I've been getting a lot of questions about Tesla, especially on TikTok, guys. You gotta see how many people, you thought YouTube people love Tesla and make a lot of videos about it. You gotta go on TikTok. Whenever I make a TikTok, they're always in the comments. People are like, oh, you buying Tesla, this, that, the third. We got to talk about Tesla and if I'm buying right now. And if you're buying, let me know your thoughts in the comments. And by the way, make sure to go follow me on TikTok at StasSurfS, shameless plug. And there's another account on there at StasSurf, or I think it's Stas Talks Money. Go follow those 2 accounts, StasSurfS, Stas Talks Money. And when it comes to Tesla, I still think it's fairly overvalued. I don't want to just say it's a garbage buy because it's come down a lot. I mean, if we're looking at the chart here, it's come down a lot. I mean, maybe not as much as some people think it should have come down, but it is down about 35% from all-time highs, 415. It was all-time highs of 415, and now it's at 275. So it was very overvalued at 415. I mean, there was no way I was touching it with a 10-foot pole at that point. But at this point, I personally think it's overvalued. But I can see why other people don't think that. I can see it. I mean, at these valuations, at 400 or 5, if it were to get to 500 or something crazy in the short term, I'd be like, all right, man, you're a little bit crazy. But at these levels, I'm like, all right, depending on your assumptions, it might be a decent play here. But for me, I am not touching Tesla, and this might sound crazy, unless it starts getting under 200 a share. If we start getting to 150, 175, I'd get pretty interested at that point to maybe throw, I don't know, maybe buy 10 shares or 20 shares. And I do have a little bit of Tesla in my one account, but I sold a lot of Tesla, probably over a year ago. I don't remember exactly, but I sold it because I had shares from about 2-3 years prior to that. Nothing crazy. I'm not like one of these Tesla guys that had all their money in Tesla. Nothing like that. It was a very tiny position. Nothing crazy. But for me to get back in and go heavy into Tesla, this thing has to come down for a decent amount, probably under $200, 175, towards 150 if we're being completely honest. And you might think I'm nuts. But that's just me being honest and whatever. If you guys hate me now, it's all good. Let me know your thoughts in the comments down below. So let's see what else ended up moving today. Nothing much. We had Square go up about 2%, but the chart still looks like crap. We have a death cross here. This has to start breaking above at least 75 for me to even consider it. So I'm going to set my alert markers that were above 75. What else did we have today? Nike pretty much broke even. They reported already, right? Yeah, they did. Their next report now is in about 3 weeks. That's going to be one worth watching. They're in the end of September here on the 22nd. So I guess that's a good spot for us to wrap the video up, guys. And if you noticed, I'm not sure if you did, but this is my new Birds jersey, baby. Eagles, let's go. You see that? And no, it is number 11, but no, it's not Carson Wentz, guys. It is the new receiver we got, A.J. Brown. If you don't know A.J. Brown, go look him up. I think he's a stud, and I had to cop his jersey. I got the jersey right here, and I'm getting ready. I freaking love fall, guys. There's something about fall, little side tangent, that is freaking awesome, right? I'm from New Jersey, so, we have all 4 seasons here. It's hot as heck in the summer. Summer's great, but then it starts to get cold. The leaves start to come down. It's Halloween. You drink your nice hot coffee, whatever. You watch your football games. I just think it's a great time of the year, Thanksgiving, Christmas. So cheers to that, guys. Hope you all are having a great time here, wrapping up summer, getting to the fall, depending on where you're at. I know it's different in Australia, maybe in other spots of the world. But with that being said, if you enjoyed the video, hit the like button. Again, we're trying to get 100 likes on this video. Don't forget to get your 13 stocks from Moomoo with a $100 deposit and your 12 stocks from Webull with any amount deposited. All of those are linked down below. And with that being said, cheers. I'll catch you all in the next video. Peace out.